heart of where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
I'm Caroline Hyde at Bloomberg's world headquarters in New York.
And I'm Ed Ludlow in San Francisco. This is Bloomberg Technology, and a banking crisis to layoffs keeps the tech sector in focus, Caroline.
Yeah, from crisis to fundamentals. We talk jobs, we talk inflation. Coming up, let's talk exactly that. More job cuts at Meta in particular. The company planning to slash 10,000 roles, Ed, and 5,000 vacant positions. More on the company's restructuring ahead.
And we'll have the latest on the collapse of Silicon Valley Bank and the big three private equity firms looking to snap up the bank's assets.
And sticking with SVB, we'll take a deeper dive into the state of venture capital and talk executive leadership with Trey Stevens of Founders Fund and former IBM CEO Ginny Rometty. But again, day two of our new time of this show, and we look at the market repercussions. What a difference a day makes as we drive higher on the NASDAQ, but this time we see bond yields actually rising after we saw yesterday the collapse in borrowing costs as we anticipated the Federal Reserve that just had to pull back in the face of a banking crisis. Today we look at inflation data, and we note that CPI is still running hot. It means the Federal Reserve is likely still to have to hike. 35 basis points moves higher on the 2-year. We also see the KBW Bank Index really take a sigh of relief. We're just starting to digest the repercussions of SVB, the crisis, and now we're dialing back our anxiety. We're up almost 5% on this particular bank index. Flip it on. Tell you where we're also up for a second straight day. Bitcoin, the reprieve is relentless. We are up another 7%. We are now trading the highest on Bitcoin, the OG of crypto, Ed, well, since June 2022.
Look, the CPI print, a real driver in the market. Most of the tech names in the NASDAQ 100 are really policy-sensitive index higher. NVIDIA and Apple, the biggest points movers to the upside. Interesting to track the ride sharers, Uber and Lyft, both higher after the California Appeals Court reaffirmed that a gig worker is an independent contractor, not an employee. Flip up the boards, Meta, 10,000 more staff to be cut. Mark Zuckerberg citing the economy, shares up 6.5%. We knew this was coming, but let's bring in Sarah Fryer from Bloomberg News to talk about this, because Sarah, 10,000 a big number. What else have we learned about the specifics of this latest round of layoffs?
Well, this is the second big round for Meta in the last 6 months. So I think what we're really hearing from most of our sources is just that the morale is hitting a low point at the company, and workers have had a lot of anxiety about what might come next. And of course, Meta is saying that it is still working to continue to restructure the company, including by flattening the organization. They want to make sure that managers aren't, having just a couple direct reports. They want to make sure that engineers to managers ratio is a little healthier in Zuckerberg's eyes, and giving them more ability to release products faster, to be more efficient. They think that reducing the number of middle managers will really help them get there. But this is really about Zuckerberg's year of efficiency. He's all about efficiency. That is what is driving the stock. And Wall Street seems to like it.
They do still seem to like it, even though many of those working at the company still don't know whether they'll be keeping their jobs by April. If you're on the tech groups, it's going to be, if you're more on the business line, not finding out till May. From a morale perspective, therefore, moving more to, I thought the buzzwords were interesting. The fact that he's still saying we're going to be investing in artificial intelligence. It didn't feel like he was really doubling down on metaverse, even though that is still their big focus.
Yeah, that's been interesting for us, too. We've really heard that Zuckerberg's focus on AI has been prominent in these last few weeks and months, which has some employees wondering whether that metaverse mission is as all-encompassing as he previously made it sound. Of course, Oculus sales he says they're strong, but certainly they had to reduce the price recently. There are some indications that it just really isn't catching on among consumers at the rate that they expected. So I think that going all in on AI is his next move here, and really relates also to the business. I mean, they have to use AI to improve their algorithm. They have to use AI to make up for the deficiencies in their advertising work because of the changes that Apple made to tracking.
Shares up more than 6%, biggest jump in around 6 weeks, Sarah. As you and I have reported, by contrast, morale is pretty much rock bottom with inside Meta. Remind us why this is happening now. We had some reporting about the urgency to get these job cuts done, about Mark Zuckerberg in particular and what he's about to do.
Well, he wants to make sure that they can meet some lower expense goals. They really want to make sure that they can be a more efficient organization as revenue growth slows. Now, the context here is that these platforms that they've created, Facebook, Instagram, these giants, are really not growing as fast as they used to. They're trying to grow the attention, but the user base is already very saturated around the world. So they have to come up with other ways to get their profits in line with what Wall Street expects, to keep that growth going. And this is how they're doing it. And I think that Meta really saw an opportunity. It's not that they have to, or else there will be some dire consequences for their business, but they saw an opportunity in this moment where a lot of companies are doing this to say, listen, we can do it and it won't reflect badly on us. And in fact, it'll make us look smart.
And in time, of course, some urgency when there's an addition to his own family as well as his Meta family with the Zuckerberg household at the moment about to go on parental leave. Sarah Fryer, we thank you so much for digging in on the Meta news. Now, of course, Meta job cuts makes us think about fundamentals. Inflation in particular, the CPI print, keeping pressure, it would seem, on the Federal Reserve. Bloomberg's Kriti Gupta, you got more on it.
Yeah, Caroline, it does feel like the focus has kind of shifted maybe just a little bit away from the banking fallout back into the idea of CPI, this highly awaited report from the Federal Reserve, from the Bureau of Economics. And this is really important because you are seeing a deceleration in inflation. This is good news for the Federal Reserve. For the first time in about a year, economists were bang on estimates, a 0.4% rise month over month. On a yearly basis, a 6% rise. But it's the components that matter here because services inflation is still rising. Goods inflation is coming down. You're seeing those shelter costs in particular decelerating. The housing market has been in focus for a while, but commodity pressures are kind of coming back up. You're seeing that in gas prices, in food prices, and that's what the Federal Reserve is going to see as the danger. And that really factors into the repricing that you're seeing into the markets because after the SVB fallout, Caroline and Ed, you did see the market reprice from a 5.8% terminal rate over the summer all the way down to 5.1% again over the summer. Essentially saying that, look, this tightening cycle is over in the last 24 hours, especially with the CPI report. You are now seeing that terminal rate come back higher and higher. Wall Street now split. You have calls from likes of Citi, for example, a 50 basis point hike to really keep the pressure on inflation all the way to the other side of the spectrum. Nomura, perhaps, talking about a rate cut and even the end of quantitative tightening, something that would bode well for a lot of the technology names.
And that's why we're seeing the Nasdaq having its best day since February 2023 of this year. Pretty great reporting. Thank you. Let's stick on valuations. Let's stick on fundamentals with CPI, with jobs. Let's talk to the We Family Office's CEO, Mel Lagomasino, an advisory firm overseeing, get this, more than $14 billion in assets. And Mel, reassert your focus here. When we're trying to work out the direction of interest rates, what does it mean from your perspective on tech valuations?
Well, I think that obviously tech valuations are likely to increase, particularly over a longer period of time. So, I'm a tech bull over the next 5 to 10 years. I think a lot of the issues we're dealing with, like inflation, are going to be solved through increased productivity. And the answer to productivity are all these tech companies and tech processes that are really going to help us become a lot more productive. So I think when interest rates were zero, people were willing to pay everything for growth. As interest rates have come up, the valuations came down. But now you're actually seeing, I think we're getting towards the end of a cycle. So I expect that the valuations will increase, particularly because you have so many tailwinds with a lot of these tech strategies. So, whether we're talking about AI or we're talking about electric vehicles, or we're talking about pharma, and you start to see the activity that's going on in the space. I continue to be a tech bull, but I'm a tech bull over time. So I think if you think about the next 3-5 years, we're going to have much higher valuations for these companies.
Okay, so you're liking perhaps an NVIDIA that has exposure both to the auto sector, but also the AI focus. Where are the companies, where are the opportunities that you think if you're going to allocate money now, you should be buying?
Well, I think there's a lot more opportunity actually in the private space than in the public space. And I think when you think about the public space, we have 5,000 companies, right? When you think about the private space, you have 1 million companies. And I think the opportunity in the public space is going to be because the public companies are buying these private companies to actually be able to have access to these technologies. And so when you look at a Pfizer buying Seagen, or you think about Google's investments or Microsoft's investments in AI, I think that's where you're going to see the growth. But obviously, I think the opportunity is much greater in the private space.
Mel, we think about inflation, we think about the Fed, but I'm looking at some of the movers in the market, and earnings is still such a big driver of individual share moves, particularly in the technology sector. There's a discussion to be had around how the rest of the year looks to tech and whether they're recalibrating the strength of the economy. You saw Mark Zuckerberg cite the sort of longevity of headwinds that his company faces in the economy. Do you think we need to think again when it comes to earnings expectations?
Yes, and I think that's why you're seeing the layoffs in the tech companies, because a lot of the growth had to do with number of subscribers or new customers, new markets that were opening up. And because I think a lot of these companies actually have huge market share, the name of the game is not going to be how many new subscribers or how many new clients. It's going to be how can you actually change your business model to create more profitability. So whether you're looking at a Facebook or you're looking at any of the media companies, I think the name of the game has changed. I think what people are really looking for is profits and higher margins.
Mel, you're the former CEO of JP Morgan's private bank. What have you made of the last 5 days in the banking sector, particularly in how it's hit tech?
Well, I mean, obviously, I think from the perspective of JP Morgan, it's been like a birthday party because everybody has tried to take their money out of the banks, out of the other banks, and put them primarily in JP Morgan. So I think that's good news for JP Morgan. In terms of the tech sector, I think when it comes, for example, to the venture space, I think we're going to see maybe lower valuations, which is actually a great opportunity for venture investors.
I think what's so interesting, and particularly, Caroline, is how we're threading what's happening with SVB to what's happening in the global economy. The commonality appears to be that tech companies of all sizes are under duress.
Yeah, largely because interest rates are having to go up. They're having to think about costs, and that means people. And Mel, it also means people who are managing these businesses. You're someone who not only was very senior at JP Morgan and now running your own money in this respect for family offices, but you're also someone who's on the board of Coca-Cola and Disney. What do you make of executive oversight here and board oversight?
I think board oversight has never been more important, and I think that especially issues like cybersecurity, for example, are more important than ever. And I think that the kind of credentials that you need to be able to have and the kind of work that you need to be able to do to serve on these boards has increased dramatically.
We Family Office's CEO, Mel Lagomasino, thank you so much. We've come breaking headlines on the Bloomberg terminal, Caroline. AMC Entertainment shareholders have approved a common share increase, issuing new equity. The shares responding inevitably to those headlines crossing the Bloomberg. We'll bring you more as we have it.
Meanwhile, coming up, we've got so much more to talk about in the aftermath of Silicon Valley Bank, of course, Ed. Still, companies thinking about where they could buy up. Apollo, Blackstone, KKR eyeing up SVB's loan portfolio in particular. And look, as we head to break, we want to really focus in on the bounce back we're seeing today on regional US bank stocks. Across the board, the Reprieve and First Republic Bank and PacWest and Western Alliance as well, after they were so heavily beaten down in the last few days. From New York and San Francisco, this is Bloomberg. Of course, we're continuing to watch the fallout of Silicon Valley Bank's sudden collapse. And that, as we understand, that Apollo, KKR, Blackstone are showing interest in SVB's loan book, for example. Here to cover all of it is our own Shonali Basak. And we now start to understand where many feel value actually lies.
We are, and when you look at it, we have the loan book that is worth more than $70 billion, so it's quite large. The question is, will Apollo, KKR, Blackstone, will they start to bid on parts of it or all of it? More likely, you'll see them bid on parts of it, because the idea here, and this is great analysis by Bloomberg Intelligence as well here, this is a loan book that has not lost a lot of money. There's a lot of questions and concerns about the quality of the loans underpinning, given that Silicon Valley Bank was so aggressive in courting Silicon Valley and the tech entrepreneurs and sometimes unprofitable companies. But the idea here is Apollo, KKR, Blackstone, they're experts here. They're credit experts. So the idea is that if they take on these loan books, they take on these clients, and they feel that they could do a better job at managing these loans. But with that said, there are other assets as well, including the venture arm, the asset manager, if you will, and the investment bank that worked on about $9 billion worth of deals last year alone.
And what's so interesting is we still to try and think about where the value is, as Shonali outlines. Shonali, we were just talking to Mel over at We Family Offices, and she was talking about board oversight and the need for that at the moment. Ed, there's real due diligence going in on what executives were and were not doing at this time.
Yeah, look, the FDIC came in and appointed new leadership at Silicon Valley Bank, but inevitably, Shonali, there is a post-mortem going on what happened and the action that executives took. What have we reported in the last hour?
There are a few things to keep an eye on here, Ed, and that is both the investigation that is happening when it comes to Silicon Valley Bank, its executives, the actions taken before. There are so many critics in the market that say, listen, some of these issues we have known about when it comes to their balance sheet management. But even beyond that, the stock sales from the managers, particularly the CEO, Greg Becker, leading into a lot of the disclosures of the information that we had seen before the collapse of Silicon Valley Bank. In addition to that, I would also note, remember, while you have the DOJ and the SEC forming investigations around the collapse of Silicon Valley Bank and the management of it, you also have the Federal Reserve doing its own investigation of how itself has handled the situation. So really questions all around the board here.
Look, the reason we're tracking both threads of the story is even 24 hours ago, we had a key venture capitalist on this program saying we want Silicon Valley Bank to survive in some form, because we've always done business with them and we want to continue, Caro, to do business with them.
And I think also people juxtaposing the decisions that were made in the US with the regulators versus the UK. UK very swiftly getting a buyer. I mean, at a very rock bottom price, it has to be said. I mean, £1 for SVB UK, Shonali. But what have you made of the differences there?
Huge differences. And remember, it is a smaller arm when you're looking at the UK arm. There's been a lot of questions. On Friday morning, when we all woke up, there was a question about half of Wall Street circling these assets. If you take a look, to the point that Ed had made, there has been drips and drabs of plans announced on restructuring, but there has been no bankruptcy filing. That's an important differentiation here, because had there been one, then it would be up to kind of the jurisdiction of a judge in that sort of a situation. But now that you have these assets slowly coming up for sale, it makes it a little easier for different parts of Wall Street to absorb these things, particularly in a way that's compliant with regulations and could help them avoid a lot of the 2008 era liabilities that cost firms like JP Morgan a lot of money coming out of the post-2008 investigations.
Wall Street is debating moral hazard, as we've been discussing on air all day. Just very quickly, Shonali, how do the banks look this Tuesday? I mean, there's still concern about the sector, right?
There's certainly still concern about the sector, but there was a lot of acknowledgement that Silicon Valley Bank was an outlier in terms of the way that its deposit base looked and the way they managed their assets. And we have to look at other sectors now also as we weigh the lagged impact of interest rates. Commercial real estate, that is maybe not as front and center and emotional as Silicon Valley Bank is, but certainly it's a slower bleeding problem. And so we are certainly not out of the woods, though it is a big relief to the market to see the regional bank stocks hop back up, particularly with the likes of a First Republic and some of the banks on the West Coast like Western Alliance and PacWest that some of the market was concerned about yesterday.
Shonali, how many cups of coffee are you on today?
I won't disclose that on air.
It's a lot, folks. It's a lot. Shonali Basak, always there with her caffeinated highs. We thank her so much, Ed.
Yeah, coming up, we'll continue the conversation. The UK's communications regulator says the BBC has to change. We'll tell you why next in Talking Tech. And as we look at some other movers out there in the market, ARK Innovation ETF saw its biggest inflows since 2021. That ETF up around 2.5% in the session. We'll dig into the specifics. That's next. This is Bloomberg. Time for Talking Tech. The BBC has got to change, says Melanie Dawes, the head of the UK's communications regulator, saying that the public broadcaster should let freelancers who are not involved in news reporting have more freedom of expression on social media. This comes after a high-profile row between BBC management and popular football show host Gary Lineker over his tweet commenting on the UK government's new immigration bill and whether that tweet breached the broadcaster's commitment to impartiality. Meanwhile, Blackstone agreed to buy Cvent for $8.50 per share at an enterprise value of about $4.6 billion for the event management software company. Blackstone has received a fully committed $1 billion credit facility as part of the financing of this transaction, which it expects to close mid-year. And finally, Cathie Wood's ARK Innovation ETF is getting a strong vote of investor confidence. The ETF attracted close to $400 million of inflows on Friday, according to overnight data compiled by Bloomberg. The largest influx since April 2021, a time when the fund hit its all-time high during the cheap money era. Caroline.
Money's still going somewhere in this current volatility. Coming up, Ed, look, we're going to be talking about what comes next for Silicon Valley Bank's leadership after its fallout. We're going to be turning to a key focus of leadership with IBM CEO Ginny Rometty, former, of course. She's out with a book on exactly that, leadership. Coming up. And also, let's just dig in a little bit for a moment into the markets, because what a day. We're having the Nasdaq having its best day since, well, the beginning of February, currently up more than 2%. IPO index. So we were so worried about IPO's exposure. Recent companies that have gone public, did they bank with SVB? They're managing to push up higher, 1.3%. Risk sentiment returning a little bit. And certainly in the era of Bitcoin, we're currently seeing 25,850 is where we trade, the highest since June of last year. From New York and San Francisco, this is Bloomberg.
It's 4:30 p.m. in London. Stocks finishing up the session in Europe. The Stoxx 600 Europe, the main gauge of equities, up 1.5%, snapping 3 straight days of losses. Recovery in banking shares, but also getting a boost from energy. More static in currency markets. Euro dollar 107 after a little bump in trading on Monday's session. We do see, though, that kind of yields climb higher story. German 10-year Bund up 20 basis points. UK 10-year gilt up 15 basis points. A lot of consideration about resetting for central bank expectations, not just the Fed, but the ECB as well. We'll continue to track those European markets all week. Keeping you up to date with the news from around the world. Here's the first word with Mark Crumpton. Mark.
Thank you so much. President Biden plans to sign a new executive order intended to reduce gun violence. Mr. Biden will announce the move during a visit to the location of a mass shooting in Monterey Park, California. The president is evoking the limited authority of the executive branch to edge the country closer to universal firearms background checks, something that he has been unable to get through Congress, although it remains popular in voters' surveys. Emmanuel Macron faces parliamentary brinksmanship and protests this week over his plan to raise the retirement age. Wednesday, a group of 14 lawmakers from the National Assembly and Senate will meet behind closed doors to finalize a single bill to be presented for a vote of both houses. At the same time, unions will gather their forces for another day of strikes and protests against the proposed changes. Credit Suisse CEO Ulrich Körner says the bank had seen inflows of client funds on Monday after markets and U.S. banks were pummeled by the collapse of Silicon Valley Bank.
So far, it's pretty calm. We even saw material good inflows yesterday still. Also, I had a client meeting which was very positive on that one. So far it's calm, but I think it's early days to look at it.
Mr. Corner spoke exclusively with Bloomberg's Francine Lacqua. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg.
Welcome back to Bloomberg Technology. I'm Caroline Hyde in New York. And look, let's keep ourselves up to date with U.S. authorities currently examining the collapse of Silicon Valley Bank for misconduct by officers, including whether stock sales, for example, by executives actually violated trading rules. It's all according to a source. We want to bring in a big name from Silicon Valley for her take on all of this. Ginny Rometty. She's the former CEO and chairman of IBM, board member of JP Morgan, and she's out with a new book on leadership called Good Power: Leading Positive Change in Our Lives, Work and World. Boy, Ginny, do we need some positive change. What do you make of the focus in particular of oversight, of board membership, of executive management at this moment?
Well, look, I think something I've learned over a long time in working with boards, it's never been more important, and the importance to have on your board people with all different disciplines. So you just had Mel on earlier talking about the importance of cybersecurity, or those that have regulatory experience, et cetera. So it just goes to show it is a job that everyone really does need to take seriously.
You sit on the board of JP Morgan, of course, one of the only big bank with still the same CEO from the crisis era, with still that management oversight. And I'm interested as to what your take is from a banking perspective of these three almost overnight collapses and what this means for the sector in general.
Well, you guys have been reporting on it, and I think there'll be many quarterbacking events taking place after that, and certainly from a regulatory side, obviously $200 billion, and what changes as a result of that, a bank that size versus the systemically important banks, management decisions, you just alluded to that. And then I think it'll be interesting, the discussion about, the role technology played and whether it was in the quick dispersion of facts and things that were not true. Some of the same technology that really Silicon Valley Bank brought to life. And then I think at the end of the day, it says a lot about really what we all have to do now with the venture cap community. And I think it's going to make difficult for some parts of VC world that it was already difficult for, like women-backed VCs, right? Which was, it's only maybe 2 to 3% of the whole community. Now it's even less. And what this will mean is more conservative, and people then tend to do business with who they know. And so networks typically then have less women in them. So I think there'll be unintended consequences like that to come too.
It's interesting you bring that up. 24 hours ago, we had someone on saying that, but also pointing out that for many founders, diverse founders from minority groups, women, it was Silicon Valley Bank that would often write the first check. You had a storied career at IBM. You know the world of technology. Do you have any experience of working with SVB and what their role was in the Valley?
Well, certainly worked with many and bought many companies, right, that they had certainly helped launch. And by the way, there are other VC firms. I mean, another one, a great one, Rethink, is one that invests in just women, the largest woman-owned VC firm in this country, in women-only investments. So I think, my experience has been positive in that there have been many, many good companies that we acquired.
It appears the world of technology is under duress at the moment. There aren't many positive headlines. Do you share that assessment?
Well, look, I think when you say it's under duress, I think to paint it all in one brush is probably not exactly right.
Okay.
And I talk a lot about it in the book, in that everybody eventually has to have a chapter 2. And I think that's what you see happening with a lot of companies. We've had chapter 2, 3, 4, 5, 6.
Yes.
So I certainly learned that point of reinvention and learned about that balance of growth and efficiency that has to happen. And so to me, this is just this chapter 2. And, it can be very dangerous when somebody attacks your profit pool, as an example. But this is a bit of growing pain, and I think that's what you see happening in parts of the market.
Ginny, there was one opinion piece that I saw that caught my attention for more reasons than one. And I wanted to get your perspective on some of the criticism that has been leveled at so-called diversity, distraction on the board of SVB. What do you make of that as someone who basically thinks a lot about diversity on boards and in executive management teams?
Yeah, look, in the book, Good Power, as you saw what its name was, which I actually named in retrospect. I actually have a whole chapter I dedicated to something called Good Tech, which on one hand talks about ushering new technologies in safely, like AI, like you've had a lot of discussion about ChatGPT. And on the other side of it is this point about, I don't even use the word diversity, because to me diversity is a number, inclusion is a choice. And I always said, I lived exactly at the intersection of society and business. I need a good workforce. I authentically believe a diverse workforce is the best workforce that gives you the best products. And so I don't view this as anything other than doing what is, yes, right for society, right for a community, but right for my company and for the products and the customers. So I think it's a shame to misplace that focus on it. To me, it is all about having a better company.
And it's about culture. And at the moment, we look at the headlines coming from Meta having to lay off another 10,000. Talk to us a little bit about your experience in having to pivot business models, having to lay off people. What do you think can be done by Mark Zuckerberg?
Look, first I would say, whenever you have to lay off people, it is a very hard thing. So put that point aside, because these are real people, real families that you impact. No one likes to do it. But I think the other thing, when, I just mentioned, Ed, about this is Act 2 for many companies, people often think about what they do, the how they do their work. I write a lot about this in the book. Is just as important, how they do it. So, in other words, you have to be more efficient. You have to do things faster, consumerism. But then also how you do it with the workforce, I think, is probably the most important thing. So how tough things are done. And again, I almost think that's the subtitle of the book, which is about doing hard things, but doing them in a good way. Doesn't mean you don't do them.
I mean, Caroline, what jumps out at me is how quickly conversations change. 10 days ago, we're fixated on artificial intelligence. SVB happens. No one utters those words. And the health of the tech sector gets called into question. Where do we go with this, Caro?
I know. The focus has to return on ultimately business models on a time where interest rates go higher. You have to do more with less. Ginny, you pivoted IBM to focus in on artificial intelligence, on the rebirth of cloud. What do you make of this fascination with ChatGPT and the hype cycle that was around it?
Yeah, look, I think what it calls, this is not going to be a technology issue. This is going to be a trust issue. So I feel like I've learned so much over the last 15 years of trying to bring AI into the world. And there's all different kinds of AI. And I'm a little bit afraid this gets all brushed with one brush of ChatGPT, because while it can do some wonderful things, as I think we all already know, you can get things that are factually incorrect, but they sound authoritatively correct. So to me, what I'd love to see now, it's wonderful that everyone's thinking about AI, because I think it can do so many good things. I just don't want the downside now to push it aside, which tells me that anybody, both using it, anybody, or building it, to think about the up and the down at the same time, versus let's look at all the good things and then, bad things to take care of. This would be different. Now, bring it in thinking about both at once. And so, there was such an uproar on education around ChatGPT. As an example, kids can cheat on their tests. I would have loved even a small thing at the same time to have come out, which was an app that said, this might have been created by ChatGPT. Now, people are building those now, and there's discussion of watermarking. But the point is that people understand what it's good for, what it's not, how it's trained. I mean, look, it's trained by the good and bad of humanity. Now, there's other kinds of AI that you can train very carefully. So there's such good. And so this is now about, my view, building trust in that technology so we really get its benefit.
We brought the discussion back, Caroline, artificial intelligence, just for a minute. Ginny Rometty, former CEO and chairman of IBM, thank you so much for your time and coming in. And make sure, check out Ginny's new book on leadership called Good Power, Leading Positive Change in Our Lives, Work and World. Now, coming up, more on Silicon Valley Bank, the fallout from a major player in the tech startup world, and how VCs are dealing with what to do next. Trey Stevens from the Founders Fund joins us here in SF. This is Bloomberg.
Over the weekend, all the firms, including us, we had put together plans to lend capital from our balance sheets to help these companies make payroll. I think that would have at least averted the crisis for a couple of weeks while the right solutions were in place.
That was General Catalyst CEO Hemant Taneja there talking about his firm's plans to provide funding to portfolio companies over the weekend and beyond. And as the Silicon Valley Bank meltdown was unraveling, other VC firms were also quick to react to protect themselves and protect their portfolio companies. For example, Founders Fund. And I'm delighted to say Founders Fund partner Trey Stevens is here with me on set. Let's go back to basics.
Sure.
When did you realize something was wrong, potentially, with Silicon Valley Bank and take action?
Well, I think it goes back for over a month where some of the news started coming out about a potential issue with the balance sheet at SVB. Wednesday night, obviously, there was the announcement about additional funding. And coming into Thursday morning, I think there was this recognition that things were going to move very quickly. And it's really hard to overstate just how quickly things moved in those first few hours of Thursday morning.
So Bloomberg had reported that Founders Fund had pulled its own operational cash, I suppose, from Silicon Valley Bank. And then there's the consideration around what portfolio companies should do. What was the decision there, the course of action that Founders Fund thought best?
Well, the first consideration is the fiduciary duty to our LPs. We wanted to be in a good position with our cash, so we were doing the right thing for those investors, and then also doing as much as we could on the portfolio side of things to shore that up and communicate that we thought there was some risk that they should be looking into.
The communication, Trey, it's such a difficult balancing act when Silicon Valley is ultimately a very small space. What do you make of the criticism and the worry around social media and the amplification of the fear come Wednesday, Thursday?
Sure. I mean, I think obviously there's a lot of, as you say, communication risk that you take in, making sure that your portfolio companies are aware of what's going on, that they have the information they need to make the best decision possible. Certainly, even on our end, it was about prioritizing the stack of our portfolio. Like, how do we communicate with as many of them as possible to give them a fighting chance? And I think our biggest regret in the whole situation is that we weren't able to talk to all of them before the situation had kind of already unraveled by the time the SVB CEO gave his press conference at 12:30 on that day.
Any regret around just how SVB was seen in that moment?
I don't think any of this was about like a judgment of SVB. Obviously, they've been a great partner in Silicon Valley for a long time, and we have close relationships with many people at the bank. I think for us it was about being intellectually honest and having a conversation about what we needed to do the right thing, as I said, for our LPs and for our portfolio companies, kind of by the amount of exposure that they had to this as well. These people aren't responsible for what happened at SVB, and they just had to do the right thing to make sure that they can make payroll, as Hemant said in the video that you guys played at the outset.
Yeah, interesting. Hemant, he's one of a collective of venture capitalists that hope they can continue to do business with Silicon Valley Bank in its reincarnated form. Does Founders share that hope?
I think we're certainly open to continuing a relationship with whoever ends up being the right player and partner in Silicon Valley moving forward. Obviously, the biggest concern at this point is that it seems like there's been a sort of a bifurcation that's happened as a result of the response of the federal government, where there's like regional banks on one side and you have the big banks on the other side, and making sure that our companies are diversified to the extent that they're going to have a good treasury plan that protects their deposits.
Let's go back to what you're focused on. In some sense, defense and defense-related technology. Does all of the energy in that subsector just stop now? Or do you continue writing checks? Do you continue to see rounds in that space in particular?
I don't really perceive that there's going to be any shift in the way that we as a fund think about making investments. Certainly there's macroeconomic headwinds that we've been facing for the last 18 months or so. But the government continues to be a customer. The world must go on, and I think for the sectors that I'm personally most interested in, kind of the intersection of technology and strategic industry, these things are going to continue largely as they have been for a long time.
Of course, you're executive chairman, co-founded Anduril Industries. You're also on the board of Flexport. These critical infrastructure players as well. I'm just interested in your experience with government. I mean, your career was started with a congressman. How do you think government has reacted?
Are you specifically asking about SVB or to the changes in the tech ecosystem?
A bit of both. Ultimately, to come in and support the situation, whether it be from the depositor's perspective and indeed just ultimately the view of government and technology at large.
Yeah, well, I think the most inconvenient thing about the situation last week was actually the name of the bank. It got instantly politicized. I don't think this was political at all. I think the government did what they needed to do to protect and shore up these smaller regional banks and to ensure that there weren't any further runs. And so it seems like they acted quickly, they did the right thing, and hopefully that stability is going to play itself out in the coming weeks.
Because it's your area of focus, what is stopping the public sector, the military, from adopting the best in technology, the best in class technology from Silicon Valley and the other areas you look at?
Sure. I don't necessarily think it's about geography. I would say most of the best technology companies working with the government are not based in San Francisco. But the primary thing that's been problematic is not policy, it's not the authorities and the procurement system, it's just culture. The government hasn't been as forward-leaning and understanding that they need access to the best talent possible to build things that are relevant to the fight in the future. And these are largely software problems. And I think most top talent software engineers are likely to be optimizing ads and not sitting in concrete basements building the future of the DoD.
Well, here's to building the future, even in this current scenario. We want to thank you so much for spending time with us. Founders Fund partner, Trey Stevens. Meanwhile, coming up, Uber, Lyft, DoorDash, shares all jumping today after a California appeals court upholds the current law which classifies gig workers as independent contractors instead of employees. More on that next. This is Bloomberg.
Uber, Lyft and other gig economy companies scored a victory after a California appeals court upheld the current law classifying gig workers as independent contractors instead of employees. Bloomberg Joel Rosenblatt covered the case. Joel, explain the appeals court decision.
Yeah, the appeals court decision is it's complicated, but it's the upshot is that the voter-approved initiative that the ride-hailing companies bankrolled in 2020 was voter approved, and there's nothing to do about that. That's the ruling in a nutshell.
Okay. Ultimately, is there any further argument to be had? Any further changes that need to be made by Uber and Lyft, or is business model free to run?
The business model is they're arguing, and the ruling says that it's free to run. There will be other challenges. There have been in other states and worldwide, including in London. So it's not just over, but in the state, this is a significant ruling. I haven't heard back from the AG yet, the Attorney General, who has sued Uber over this and Lyft. It's not unclear if they're going to appeal to the state Supreme Court yet. They may do that.
But to clarify, Joel, that is an avenue open to them technically.
That's an avenue open to them. I think it's a voter-approved initiative. Just to step back for one very brief moment, the ride-hailing companies paid $200 million in an ad campaign to initiate this proposition to do an end run around state law, and they got, with all that money, they got the initiative passed by voter initiative, and there's not much to do about that, I think, legally.
Joel, great to have your analysis. We thank you, Joel Rosenblatt, as he waits for that call from the AG. Meanwhile, that does it from this day 2 edition of Bloomberg Technology at 12 ET, 9 a.m. PT, Ed.
Yeah, and you can recap day 2 on the podcast, iHeart, Apple, Spotify, Bloomberg, wherever you get your podcast, Caro.
And let's just check in on these markets, because once again, we are ripping higher. This is a story of even though inflation runs hot, Ed, the S&P, the NASDAQ on the higher side too.
We'll continue to track it. Inflation, the Fed, all impacting the technology sector. This is Bloomberg.